All right. Good morning, everybody. Hey, it is Tuesday, September the 9th. We are little less than 2 months away from ACA OEP. And we're going to be dealing with some serious political changes. And it's changing not daily, but it's changing. And so one of the things that I like using Allstate for, and I need to use them more for other things because they do have a whole suite of products, is I use the Plan Enhancer to build up or to supplement my ACA plan. And here's what I'm thinking, guys, is going to happen next year. Silver plans, because the subsidies are changing, are going to increase in premiums. Now, See, silver plans are the only plans where CSRs are applied if they qualify. So if a customer gets a CSR, a cost sharing reduction, that deductible, that co-insurance, that max out of pocket is going to drop. Now, the premium, because we are losing the enhanced subsidies, those premiums are going to increase. So here's what I'm thinking, and it's all a prediction because we don't know yet, is we're going to have to start moving a lot of our insureds, depending on their income, to either a bronze plan or a gold plan to save premium. When that happens, we lose cost sharing reductions, guys, which means they're going to start dealing with some very high out of pockets. So two things are going to happen. We're going to either have to supplement it with a plan enhancer so that we get coverage for those insureds with those higher out of pockets, or we may be looking at an alternative of ACA, which is short-term medical. So, Phil, thank you for being on today. I'm glad you're here. We're doing a remote. At least I'm remote. You guys are. I'm sitting in my car. So a little nuts here that I have to do this. I'm at a carrier rollout meeting in the parking lot. But I will tell you that we've got a lot of changes to maybe short term and the plan enhancer. So Phil is with Allstate Health Solutions. Phil, I'm going to let you take over and thank you for being on with us.
All right. Hey, you can hear me and you can see the screen.
Yes, we can. Perfect.
Okay, great. Louis, thank you so much for having me. Thank everybody who's on the call. Yes, we're here to talk about not only an alternative to ACA that's a fit for some of your customers, but also the Plan Enhancer, which is a great add-on product to help people be able to afford to use their health insurance. And that's notwithstanding, I just heard on the TV today, they have copper plans now. So who knows what the out-of-pocket is on a copper plan? If you know, chat it out so I can speak to it. But anyhow, so this is me and my team. We have over 110 years of experience in the health insurance space, all types of health insurance. And we get paid to help you folks and we care. So hopefully, as I go through the presentation, you could tell how much we care as we're trying to help you with products and trying to help your customers who are going to possibly be in a challenging spot this fall. So these are our products. We offer short-term medical, and then we offer a whole host of supplemental products that, as I mentioned earlier, help people be able to afford to use their health insurance. And then of course, we also have senior products, including everything with the dental is no waiting period. So dental is the easiest add-on. We're not going to have time to talk about it today, but these are all the supplemental products that we have here at Allstate. We have a lot of it. We got a lot of insurance here. So these are all the changes, very similar to what was mentioned earlier. This is what you folks are going to have to deal with, and in addition to the new copper plans. So yeah, there's a lot of stuff to handle. All right.
Phil,
So,
can you go right back to that?
yes.
Yeah, it's very interesting on, and I thought I was on top of things, but I haven't even heard of a copper plan.
Yeah,
Can
so
you can
that
you
just
talk
hit the
about it?
news. Yeah, so the president of the United States today uh, has made the decision to offer copper plans, which what I understand, I used to sell the ACA myself, so I'm very familiar. They were referring to it as plans that students used to be able to buy or young people under a certain age, like under 30. So those plans were available at one point, and I think they faded a bit, or they really controlled the enrollment on copper plans, and now they're opening it up. And it's a smart move because, as we all know, The subsidies are going away. I mean, there's people that are going to be sitting across the desk from you saying, I can't pay 2,800 bucks a month for my family's health insurance, or I don't like the network, or I don't like the out of pocket. So yeah, so stay tuned for copper. But look, you folks are dealing with a lot of stuff. I understand nobody's been able to take their testing yet for ACA plans. So, and
That is
maybe that's
correct.
because the copper plans are coming. Really don't know, but I feel bad for you folks, and I'm here to offer solutions. So here we go.
Well,
Um,
and here's the deal, Phil, and I'll
yeah.
tell everybody about this. Relax on the testing. A lot of people, those of you that are already set up, you can still sell in 2025 if you have an SCP. So you're not out of business. Now, the ones that are hurting, and it's because the carriers are waiting, they want the certification, is your new agents. So you new agents, yeah, we got no choice. It's out of our control. But I have a feeling here in a couple of weeks it'll come out, knock it out, get your certificate, send it to the carriers, and then you'll get set up. So yeah, a lot of people are freaking out about that.
Don't
Phil,
freak out.
are you gonna talk about the relaxation of the enforcement on the short-term medical?
Yes, that's the next screen. That's the next slide.
Beautiful.
All right, here we go. Here it is. So, yeah, so over the last year, we've been stuck with very short-term medical plans only lasting up to 4 months. So, in the last 2 weeks, CMS has come out and said they're not going to enforce the 2024 rule, which forced 4 month policies on us. So, policies are up to 3 years. It really depends on what state you're in. So, I got a really good state map, and we can dial in to states where you do business. So, what's new is here at the bottom. So, in many states, we offer up to 36-month coverage for short term medical. It's important to note that we guarantee the rate. If your customer pays us a few more bucks, we'll guarantee the rate stays the same for a full 36 months. Every single monthly payment's the same. The other thing that's new is Recuro. So currently, historically, we've offered a discount drug card. It works just like GoodRx, but didn't cover uh, pre-existing drugs. Now we offer Recuro. Recuro is a $10 upcharge. You'll see it when I run a sample quote in a few minutes. And the benefit to Recuro is it's a zero RX copay for 800 different generic medications, up to $50 per fill. And even though the medical plan doesn't cover pre-existing conditions, the prescription card does. So if you enroll somebody, let's say, using an example with high blood pressure, the high blood pressure in the first 12 months of a multi-year policy isn't covered due to pre-existing condition exclusion. But that person with high blood pressure, if they buy up to the Recuro, the high blood pressure medication, there is no pre-existing condition. So I think that's going to make writing business easier. And we do have plans that are, we have long duration plans, but then we also have ones just to get somebody, like if someone came into you today and say, I just need to get to open enrollment, that might be a product that works. All right. So if you're new to short-term medical, this slide is really important. So the big view on this is short-term medical is only a fit for about 50% of the people that you're going to run into because it doesn't cover pre-existing conditions. If you buy a multi-year policy, the pre-existing conditions period drops off after the first 12 months. So to give you an example, I could buy a short-term medical today, out 3 years. First year, let's say I have high blood pressure, it's going to exclude my high blood pressure for the first 12 months. But in the second 12-month policy and the last 12-month policy, my high blood pressure would be covered. So the best fit customers are on the left. These are people who want a better nationwide network. These are people who are willing to take their savings and keep it in their pocket. And certainly for people who don't get a subsidy. Not a good fit people are going to ask you questions, sometimes too many questions, and that'll be your indicator. But short-term medical, like a rental car, is going to get you from point A to point B. It's going to cover conditions that occur while you're on the plan. All right. Now, I saw there was a few questions. You want to address them now or later? Let's take a look at what
Yes,
they are.
I've been answering them. Let me double check to
Oh,
see.
good. Okay. So you're on it. All right.
Yeah,
Great.
we're
Thank you.
good.
All right. Appreciate it. So
I will tell you
short.
this, Phil. I did get a private message from one of the agents. Can we get a copy of the slide deck when you're done?
Yeah, of course. Yeah.
Maybe
I'll
shoot me
just
an
make
email
a,
with it.
yeah, yeah. Okay. To yes. All right, gotcha. All right. So, all of our plans cover office visits. All of our plans cover unlimited urgent care visits. The urgent care is a $50 copay. I think I have a slide for it. And we have multiple prescription options. And one of the most important points is we offer next day effective date. So you can write coverage with us any day of the month as soon as the next day. So let's take a look at the plan design. So we really have two primary plan designs. The copay enhanced, which I think it's a good fit for people who want a higher maximum. This plan has a $5 million maximum. The deductible and coinsurance varies by state. Predominantly, it's this 6,000 or 8,000 deductible, and then 100% coverage thereafter. The copay plan does allow your customer to pay $40 primary and $60 specialist. And it has its own drug card, which offers $10 generic drugs up to 3,000 max. But what's important to note on the copay enhanced is that the copays are not unlimited. So if you're selling a plan that's 6 months or longer, each person in the family only gets to use this copay feature 2 times during the policy. So it's kind of limited. This is where the smartest money is. This is where the greatest amount of our sales come from, and it's what we call our copay enhanced plans. And you'll see them when I run a sample quote. Whoops, these are $1 million maximums. We still offer pretty low deductible and 100% coverage. So you could do a $2,500 100%, a $5,000 100%, not have to explain to your customer what coinsurance is, or you could take a more traditional 80/20 or 50/50. So all these plans have $1 million maximum. And if you've got customers that are like, hey, I never use my health insurance, then they could really take a higher out of pocket and save some money.
Hey, Phil, would you mind?
Yes.
Can you go right back to that slide? Can
Mhm.
you explain the deductible and max out of pocket? Because it is different
Yes.
term than ACA.
It is, and I don't like the way we do it, and that's a really good. You at least hopefully appreciate my honesty. I don't like the way we do this because when I think out of pocket, which is denoted here as OOP, when I think out of pocket, I think what's coming out of my pocket, and then I'm done, right? But the way we do it's a little bit different. So if you take, let's say, a $5,000 deductible on our short-term medical plan and pair that with an 80/20 coinsurance, it would look like your out of pocket's 5,000. But what you really have to do is add these two numbers together. So if I buy a 5,000 deductible 80/20, I actually have $5,000 worth of coinsurance in addition to the deductible. So I guess if you're looking up here, ignore where it says OOP and just focus on where it says coinsurance because you got to add them both together.
Yeah.
All right.
And Phil, it's just not you guys. The other short-term carriers that I'm aware of, they do the very same thing.
I hate that. I hate that personally. All right. So, all of our plans cover office visits one way or another, either through a copay or deductible and coinsurance. If your customer has to have their office visit subject to deductible, if they're using the network, and I'm going to talk about the network, a non-specialist office visit is going to run approximately $70. I mentioned the urgent care at $50 unlimited. There's an emergency room benefit. It's really a penalty if they go to the emergency room and they're not admitted. They owe the 250 plus their deductible and coinsurance, and we also cover X-ray and lab work. The network is the richest part of our offering. Generally, in the Eastern United States, we use the Aetna network is the preferred network. Here's a look up here. It's every hospital that matters in America and a boatload of doctors. In most states, you'll spend the rest of your day trying to find a doctor that doesn't participate with the Aetna Open Choice Network. So this is where we shine. This is where we move away from a very localized ACA network to a broad nationwide network. I hope that makes sense. And then if you're in the Western United States, we also offer the Cigna network.
How
All
about
right.
central? How about central like Texas?
Texas would probably be Aetna, but you have the choice of both.
Okay.
So, um, hopefully this makes sense. So we have different types of multi-year plans. So we have what we call renewable plans. So renewable plans can be up to 3 years in length. We can either guarantee the rate or not guarantee the rate. Not guaranteeing the rate means your first 12 months, you know what your rate's going to be. In the second and third 12-month periods, you won't know upfront what the rate's going to be. The what's interesting about the renewable plans is the coverage period does not reset between years on the plan. So if you buy what I was suggesting, which is the $1 million maximum, you take a renewable plan, that $1 million maximum is covering the whole 3 year period. And lastly, if they pay us a few dollars extra, we'll guarantee the rate to be the same every month for 36 months. Consecutive plans are up to 2 years, and the coverage period maximum does reset between the years. And on the consecutive plans, you will see the rate in the cart for the second year when you enroll the first year plan. Um, and as I mentioned earlier, and hopefully this makes sense to you folks, if you're doing a multi-year plan, because you're buying, let's pretend you're buying a 3 year plan, you're buying all 3 years up front, the pre-existing condition period drops off after the first 12 months. Meaning, if I come in the door with high blood pressure after the first 12 months, the second year and third year, I could actually submit claims for high blood pressure and have them covered.
Hey, Phil, two questions here. Question
Yeah.
number one is on pre-existing. Are
Hmm.
there some pre-existings where you can get the plan, but it's not covered for the first year?
Yes,
Are there some where there's like, no way, we're not going to provide coverage?
that's correct. And we're going to look at the health history questions in a second. All
Beautiful.
right.
Second
So
question, Phil.
yes.
And this one's a tough one, man, because I get asked and I still don't know this answer.
All
So,
right. I might not know it either, but go ahead.
okay, here we go, man. I'm counting on you on this one. Okay.
There's a lot of
So
pressure.
let's say that I'm on the last day of year one
Oh, in a
and
multi-year policy.
on a multi-year policy and I'm
Yes,
in the
sir.
hospital. Okay. And I'm going to continue staying in the hospital for whatever that I'm being treated for. And I go into the first day of the second year,
Covered.
covered
Covered.
on renewable
Covered.
and consecutive.
Yes. That's the whole point of the whole thing. If you think about it, right? You're buying a multi-year plan. The pre-X drops off after year one. Anything that happens in the first year that's a covered charge is going to be covered in the second and third policy.
Yeah, but
You're good.
okay. So I'm gonna kind of twist this a little bit. So
All right.
let's say it's a condition that's not pre-existing. I get diagnosed
Cancer. You develop
cancer.
cancer in the first 12 months, covered in the second 12 months, covered in the third policy.
Beautiful. Is
Covered.
something is are the deductibles and out of pockets resetting from one year to the next?
It depends. So if you buy a renewable plan, the deductible. So I guess here, it's right here. Deductible and co-insurance reset with each new policy term on
Okay,
either one of these. Either one of these. We're good?
got it.
All
Reset
right.
with you. Okay, I'm with
Yep.
you. Okay,
All right.
tracking.
So,
Thank you.
yep. In most states, we force your customer to join our life association in order to get the short-term medical. Comes with a whole bunch of benefits. The three that are worth mentioning is this is where they get their outpatient discount prescription drug card that works like GoodRx, does not cover pre-existing conditions in the first 12 months. The other benefit is unlimited telemedicine benefits that are at no charge, and also Active and Fit Direct, which would allow your customer to join a gym. The price actually changes now $28 a month, and in addition to the short-term medical price. All right, so this is the map. This is really important, very, very important information. So let's just take a look at what we're looking at here. So gray states, we have no product. So from Pennsylvania through New England, short-term medical is illegal in most of those states. We got no product. The blue is all the blue states are game on. So Florida, all these dark blue states, these are plans up to 36 months coverage. Then there's South Carolina that is up to 11 months, and we can string three of them together. So in South Carolina, you can buy up to 33 months on a consecutive plan. But then we have these yellow states, and unfortunately, I need to draw your attention to two places, Texas and North Carolina. So Texas has made a decision to stick with the current 4-month maximum policies. We actually expect that to change. So I'll just have to be in touch with you on the short-term medical to let you know when it has changed. North Carolina has come back to us and said they're only going to allow 4 months and they're not going to change their mind. So if you're right in North Carolina, it's 4 months. And quite frankly, I want to make sure we're all on the same page here. I wouldn't be jumping through hoops to write a 4-month plan because if you're using it as a long-term solution, you got to find two other carriers to coordinate with because you can't have more than 4 months in a 12-month period. So that's what the map looks like. And then there's these green states. I think the green states are simply up to 6 months, which again doesn't make it easy to write a long-term solution. Anybody have
So,
questions on the map?
yeah. So Phil, in Texas, that's where I'm at.
I
I,
know
we're
it's a
business as
bummer.
usual. No combining of plans for a year.
That's correct. Yeah, and I wouldn't recommend it, even if you could do it using two other carriers. It's just too risky, and it's again, so if you're new to short-term medical, if you're not sure if it's in a gray area, don't write it. Find a way to connect with ACA. But you'll know when it's right. Because they'll say things like, hey, I never use this. Hey, I'm paying too much. That's when you ring the bell. All
Whew.
right. So I know it's crazy. So one of the key features for us is we do offer child-only policies. So in this year, it could be a big year for breaking families up. I know you don't want to hear it, but if you've got like younger children that are healthy, they could peel them off onto their own short-term medical plan and take the parents that might have more significant conditions and keep them on an ACA plan. We cover through age 25, just like an ACA plan, as far as dependent children. Um,
Hey
we're going to go
Phil,
through the health. Yes.
this is huge, especially for college kids that just need something because they don't want to pay the school coverage. Do we
Yep.
still need to put an adult on the app?
It's
Uh, um,
child only. If you're 60 days or older and you breathe air, you can have your own policy.
oh, beautiful.
Okay. And we make it really easy. And one thing I didn't mention earlier is we don't require social security number for any of these plans. So if the person's a legally present foreigner, they're eligible. All right. So we're going to go through the health history questions. The height weight's pretty simple. We just can't take males over 300 and we don't take females over 250. We have a handful of states that do offer a guarantee issue short-term medical. Um, so if you're in a state that offers it, you'll see it as a quoting option. All right, so here are the health history questions. There's four of them. One is anyone pregnant or an expectant parent? So please don't come to me and say that the wife's not enrolling because she's pregnant, but we want to enroll the husband. We just can't take that. So won't take pregnancy or an expectant parent. Last 5 years, as your customer been diagnosed or had treatment for AIDS or HIV. It's pretty straightforward. This third one is simply, hey, did your doctor tell you you need surgery or treatment that you hadn't gotten done yet? Another pretty easy one. Because you wouldn't put somebody who's got pending stuff on a short-term medical because it doesn't cover pre-existing conditions. This is the last one. This is the big one. This one goes back 5 years. This is what's going to knock out diabetes. As an example, won't take any kind of diabetes, pre-diabetes, gestational. If the diagnosis has the word diabetes in it, we can't take it. Another one, and this is going to knock out, is you guys can read stroke, heart, cancer, but one sometimes people miss is neck back disorder or joint replacement. So just go through these questions with your customer carefully. This is a simplify issue. We don't underwrite this. You check no to the four questions, we're issuing the policy. So those are the health history questions. There's four. Won't take males over 300, can't take females over 250. All right. We do offer preferred rates. If your customer's preferred, they save 20% in the cost of the plan. Um, I have, so here's a little more information on preferred. In order to save 20%, they can't use tobacco, can't have a DUI or moving violation in the last 2 years, can't own a motorcycle, can't be taking medication for blood pressure, cholesterol, anxiety, depression, and the preferred has a separate build chart. And again, you can't screw this up. You just answer the questions. It's going to tell you what your customer is eligible for. One last thing on preferred rates. Don't tell your customer they're definitely going to get it. Every once in a while, well, we run an RX check as soon as you click the submit button. Occasionally, on a very occasional basis, something's going to get kicked out for these specific medications: blood pressure, cholesterol, anxiety, depression. So just tell them, hey, we're applying for it. We think we're going to get it. It's not a guarantee. So you don't have to resell it if in the off chance they're offered standard rates. All right. Only the primary applicants can have preferred rates. Um, this is probably the most important screen today. And I mentioned it earlier, this is only a fit for 50% of the people you run into. There's a whole host of exclusions that are different than an Affordable Care Act plan. Where this plan shines, and we have agents that buy this plan for themselves, and unfortunately, they've had heart attacks, they've been diagnosed with cancer. That's where this plan really shines because you've got up to $1 million to cover all of those things, or $5 million if you buy a copay enhanced plan. So make sure that you read the whole brochure and that you encourage your customer, if they can't read their whole policy, at least read the excluded charges so that your phone's not ringing at claim time. All right. As I mentioned earlier, we offer any day effective date that can be as soon as the next day. The way to pay for these plans, any of our plans, is out of the checking account via EFT or via a credit card. All right. We have a website, allstatehealth.com. This is not where you go to quote, but this is where you go. If you click agents and brokers and then marketing materials, this is where you can find a brochure by state or a sales flyer by product by state. And this is also a website where existing customers can go and they can download a claim form for any of our supplemental policies. All right, so this is the big one, folks. That was short-term medical you just went through. This is Plan Enhancer. Plan Enhancer is the ultimate ACA attachment product. And the reason it's the ultimate ACA attachment product is it is guarantee issue. It is guarantee issue, meaning if your customer breathes air and they got a credit card, they're getting it. So what's the value? Well, let's take a look. So this is why the Plan Enhancer is so great. So the Plan Enhancer is an accident plan, and your customer can get a lump sum of cash per accident from anywhere from $2,500 to $17,500. My understanding is bronze plan out of pocket's going to $10,600. If you were listening to Lewis earlier, he was telling you there's going to be a lot more people that wake up and they're going to find themselves in a bronze plan. So you can tailor the accident benefit to mirror or come close to mirroring what their ACA out of pocket is. There's no network your customer needs to use. All they need to do is give us an itemized bill and a claim form, which they can find at the website I just told you about. This is cash directly to the customer. The only time the cash doesn't go to the customer is if the provider submits the claim. Okay, so when I go through here, we're going to use some acronyms. So I want you to understand what these mean. AME simply stands for accident medical expense. So that's the accident portion of this plan. We also have a cancer, heart, and stroke rider denoted by CHS. And then there's a sickness hospitalization rider. It's denoted as SIP. So if you see these acronyms, they're referring to accident, cancer, heart, stroke, or sickness hospitalization. All right. So this is also important. The customer is going to get the lesser. So when they have a claim, let's say they're buying a $5,000 benefit and they have a $4,000 accident. We're reimbursing them the $4,000. But the $4,000 reimbursement is based on what you see here. So it's the lesser of the bill charges or the negotiated rate. So, for example, if you have primary health insurance through Blue Cross of Texas and you have a discounted amount due to the prearranged discount let's pretend it was a hospital that you went to see, the Blue Cross network and that hospital have a negotiated rate discount where the insurance company and the customer don't pay the full amount. So we will base the reimbursement on the accident based on the bill charge, the negotiated rate, or what this says down here is usual and customary. So whichever is the lowest, that's how we reimburse the customer on an accident piece of this. Okay, so the customer also gets the ability to have cancer, heart, and stroke rider. What that means is, let's pretend they pick a $5,000 benefit per accident. They're going to get $5,000 on first ever diagnosis for cancer, heart, or stroke. Emphasis on the words first ever. So if your customer come to us and they had previous cancer, we'll still cover them for heart or stroke, but they won't have coverage for cancer because it's first ever. There's also waiting periods, as you can see here at the bottom. But this is an excellent way to provide lump sum cash to somebody who's have a very serious diagnosis. All right, and then this is another, it's probably the strongest part of it is, let's say I pick that $5,000 per accident benefit. Once per year, if I'm sick and hospitalized, I get the $5,000. And then this is how you cover somebody's out of pocket, right? And it's 2 benefits per family per year with a 30-day waiting period, and it does not cover pre-existing conditions. There's also a fair amount of exclusions here, right? So there's a 24-month look back on pre-existing for cancer and stroke. Now, I'm not going to read all of this to you, but there's a 90-day wait and a 30-day wait for heart stroke in these states here. So there are some waiting periods, and the reason there's waiting periods is because it's guarantee issue. And then you can see some of the sickness exclusions here on the right. So really the bottom line with this product is, I mean, and I don't know how you folks have the conversation. I'll really let Lewis guide you on that. I would just say personally, I just wanted to share this. I always like to ask the customer, like, hey, who's your accident plan with? Who's your hospital plan with, right? And you know what they're going to say. They're going to look back at you and be like, I don't have a hospital plan. But think about it this way, folks. If you walk outside and look up in the sky, that's your out of pocket on an ACA plan, between what the actual out of pocket is, and you could find yourself having to leave the network, which means the sky's the limit, right? But with this plan enhancer as an add-on, a guarantee issue add-on, you look up, you see the ceiling, that's your limit. That's really what this does for the customer. So, Lewis, do we have any oh, well, here's the state map. So, the plan enhancer is available in Texas, Florida, and everywhere else you see here that's blue.
And I would tell you guys, this is how I like to offer it. So you look at the max out of pocket on an ACA plan, and let's say, it's the new one, 2026, 10,600. And in an ACA plan, if you have more than one person insured, that out of pocket applies to 2 people. Okay. So now we're talking over 20 grand, but let's stick to the 10,000 per person. So let's say that you downgrade somebody from a silver because the rates are too high, and you put them into a bronze because it's more affordable. Now you've increased their out of pocket. You got to have that conversation with them. Mr. Insured, your out of pocket now is 10K. This is what you're going to have to pay if you're hospitalized. Do you have 10K? And the answer, you're going to get 2 answers. The one you're probably going to get is, are you kidding me? No way. Well, guess what? I've got a solution for you that will drop money straight to you in the event of an accident, or if you're hospitalized, assuming you've got the sickness hospitalization rider. And it's that simple. And then the other thing I tell them is that, look, these hospitals, assuming this is a hospitalization, they want to get paid. They're just not going to write it off. They're going to come after you for that money. So that's one answer you're going to get. The second answer you're going to get is, yes, I got 10K. And I turn around right back and I fire at them. Is this what you want to use that 10K emergency fund for? No, not really. Perfect. I've got a solution. Let's go look at the solution. And that's where you come up. You've presented a problem. 10K in the in the spectrum of a claim. My brother-in-law just had diverticulitis, the intestine deal. Okay, over 200,000 with the ER, total everything up, 200,000. When you look at a bill like that and you're out 10K, you're like, okay, that's really not bad. But still, it's 10K. So you should have a supplement. This is not a plan that you're going to substitute ACA for, but this is a supplement so that it can drop some money into the insured's account to help meet that maximum out of pocket.
Thank you, Lewis. Yeah, you're right. And really the key is now this is a 38-year-old female, just to put this into perspective, and I'm quoting in West Virginia today simply because they have all of our options. So here's the plan enhancer. So there's this little thing on the side that tell you what product you're in. I'm just starting with plan enhancer. And here's where you would download a brochure. Here are the prices for the accident plan, right? And you can see that let's see, so next year on a bronze plan, you're just a little bit above 10,000, but let's just pretend that this person only has a 5,000 out of pocket. So that $5,000 out of pocket is 1,900 a month. And we just ask that you have the conversation. Everyone's not going to be a buyer for this. There's some people who are just plumb stupid and they're going to just give 10 grand to the hospital. So what happens is when I go to put this in the cart, I click the add button, it's going to say, all right, do I want the cancer, heart, stroke rider or the sickness hospital rider? I'm saying I want both. And then I add it to the cart. And here's your cart on the right-hand side. It's important to note, you don't have to buy the short-term medical to get the plan enhancer. You can just come in here and just do a plan enhancer. You find your plan, you stick it in the cart, you click apply. Once you click apply, it's 5 minutes of typing. At the end of 5 minutes of typing, you're going to hit the submit button. Your customer's going to get an email. They have to e-sign. They can either e-sign via email, text. There's 4 different ways to sign for the policy, but if you do it right, it's 5 minutes of typing, 1 minute to verify. You'll both get an email that says the policy's active. Super easy to put this together. If you click on the short-term medical, and I know I'm running out of time here, Lewis, so very quickly, when I click on the short-term medical plan tab, it's going to present me with some initial health history questions. I'm going to go ahead and issue them because I just want you to see the rates here. There's a height weight requirement these are questions for preferred. So I'm just going to put in what I think is a normal height and weight. Okay, and then it says, do you want to see standard rates, right? So one of the things for eligibility is, have you had previous coverage 9 out of the last 12 months? If you know your customer doesn't have that and you check no, it's not going to let you, you won't see how to get preferred. But I'm going to go ahead and just answer a couple other quick questions. And now I can see preferred. So this is what we've been talking about earlier. If I'm preferred, I save 20%. If I single pay up to 12 months, because that's the maximum you can single pay for, I save another 20%. Most people do monthly. Okay. So I talked about a lot of different rate lock options. We're going to do the 36 months with a rate lock, meaning my health insurance is the same for 36 months straight. The price is never going to change. And I would going to go with a 5,000 deductible 100% plan for 316. Okay. That's going to offer me no wait dental. You can buy the dental today. You can use it tomorrow. It's the Aetna network nationwide. I'm not here to talk about it today, but that's how you help somebody with either a short term or the plan enhancer. They don't always have to take the riders, but it's guarantee issue, folks. It's a 2 minute conversation and a 5 minute enrollment. Lewis, what else do you want to hear today?
Man, I think we nailed it. These are the exact
Uh,
two topics. I will tell you this, Mary, we don't talk commissions on here. Hit me up. It's in when you contracted, you got the commission schedule in your contract. So
it's way more than an ACA plan, Mary.
yes. Okay. So look at the
Significantly
contract that
more.
you signed. But here's the deal, guys. Not only do they have this enhancer, the short-term medical, they've got some term life here. They've got dental and vision, standalone cancer and heart attack. They've got they have a whole suite of products that we could offer.
Yep, cool. So maybe we can do a little bit more on the next. I think we have another one Is it later this week or? Well, we have a bunch of them. I'm sure you can let people know. I will send you the presentation, and please just if you need help, reach out to us. They pay us to help you folks. So if you need help, let us know. And of course, hopefully you've discovered today that we give you real life examples, real world advice. I mean, I used to sell ACA plans myself. It's not easy, and this year's going to be tougher than ever. So use us, lean on us, let us know how we can help you. Lewis, thank you so much for having me on
Hey,
today.
we got one more question, Phil, and it's
Yeah,
coming from Isaac asking, co-pays for a 36-month plan renew every year?
yeah. So what happens is the 36-month plan, so let's look at it real quick. So short-term medical, I always like the enhanced plans, but if you scroll down, you'll see the copay enhanced. And as I mentioned earlier, sometimes these deductibles and coinsurance will vary by state. So if I bought this plan, the benefit to me is I'm going to get $5 million maximum. I'm going to get two copays per family member per year. So I'm not going to get a lot of copays, and I'm paying a heck of a lot more for this plan. That's why I'm saying it's really a benefit to people that want a higher maximum that just would not be comfortable with less than 5 million versus someone who really wants to pay copays because you get so few. Yeah, I think you get what I'm saying, Isaac. So I hope I've answered your question, sir.
Isaac, you can unmute if you want, Isaac.
Let me
Yes,
see.
Phil, thank you so much. Yeah, I got it.
All right. I appreciate it. Like I said, if you need more to be comfortable, that's what we're here for. And trust me, I hope you can feel it. If there's something that's on the edge, I'm going to tell you not to write it, because we don't want our phone to ring unnecessarily. We just want to help people.
Hey, Phil. All right, man. Well, man, thank you so much. I appreciate your time. A little short this morning, guys. I've got to carry a rollout meeting to get to, but
All right.
super informative. Look at that map well, first of all, I will be sharing the slide deck with you guys.
Yes.
Put it out.
Yes. Yep.
But know which state you're in, what kind of options you're going to have for the insureds. Unfortunately for me in Texas, man, it makes it a little tough. I was hoping we were going to have the 1 year option, but
I don't know what Texas is thinking, to be totally honest with you, but it is what it is. We just have to deal with what we got. And
I agree.
yeah, if there's any changes, man, I'm all over it. We'll be crawling over you with emails and phone calls, letting you know it's changed. So,
Phil,
um,
it's one last question. Do you have more information about those Cooper plans, the catastrophic plans that you know if they're going to be available in every state or there's
oh,
new
the copper
regulations
plans.
coming?
I don't know. I just heard about it on the TV this morning. I think there's going to be a lot more information coming out, but there's got to be, if I'm understanding your question, there has to be some mechanism that makes it less, either the out of pocket or, I mean, they can't make the networks any thinner, so it's either got to be the out of pocket or I don't really know, but I guess we're going to find out soon.
Yeah,
Okay,
we
thank you.
will find out. And then Isaac, just stand by. As soon as I get more information on that, I will be doing more trainings. By the time we get to open enrollment, we'll have this down.
You're
Okay.
100% right. Thanks, everybody. Appreciate
Okay.
you.
All right. Thanks again, guys. Have a good one. Bye-bye.